Hi, this is the video analysis for Orbex.com. My name's Ian Coleman. It's the week 12th of November 2018. We're going to be covering the dollar index, FX majors, highlighting what patterns we're seeing, what levels we're projecting to, and using our bespoke support and resistance to highlight decent entry levels. So first of all, the dollar. We did see a evening doji star formation posted back on the 13th or week 13th of August. That has now been breached. We're actually looking like we could move up towards this 97.86 61.8% extension level. We have got a shorter time frame highlighting resistance at 97.42. As far as DMARC is concerned, there's no clear indication that the rally is coming to an end. In fact, the 8-hour chart is actually showing a bullish count at the moment. So I think dips are going to be bought into at the beginning of next week. And I think we're going to see a rally up to this 97.42 level and potentially 97.86 before we have scope for sort of any downside pressure in the dollar. So reflecting that back onto the FX majors, and this is the first time frame we're going to show for euro dollar. We've seen a channel breakout, we've seen a bit of consolidation around the 161.8% extension level, which comes in at 113.45. However, there's no clear indication that this sell-off is coming to an end, and I believe that 112.50 is going to be a very attractive downside level for euro dollar this week. And in fact, if we go to a larger time frame, then we've got this trend of lower lows coming in at 112.48, so just 2 ticks inside of that Fibonacci extension level. Just looking at my other charts just to highlight where our bespoke resistance is. At the beginning of the week, we've got 113.74, 113.79 is going to be quite a decent upside barrier, and a breach there on 114.01 is the next upside resistance. So as always, we're going to be looking for decent risk reward setups. I'm going to be looking at selling into rallies at the beginning of the week. Cable, quite a difficult one really. We've had a decent move to the downside. We still believe this is corrective. If we actually break down into shorter time frames, we can see that the last move to the upside was in 5 waves. We've got a previous swing low here, which is from the 5th of September. That's coming in at 127.85, and only because of the amount of upside pressure we could get in the dollar do we think there's scope to get down towards this level. We've got a 78.6% extension coming in at near enough 128 the figure. So this sort of area is solid support next week. To the upside, we've got resistance at 130.91. Dollar Swiss is holding a short-term Fibonacci level quite well. We've moved up potentially in 5 waves. So if we put our 8 wave count on here, and we've got a potential sort of 5-wave count to the upside. This is a corrective formation at the moment. As long as we don't get a breach of this previous swing high, which is a 10032, then it keeps the count alive. There's reverse trendline support coming in at 10028. Again, we've got a weekly bullish count, and we've got an 8-hour bullish count, so there is scope for upside pressure. And in fact, we need to see a breach of actually 10060 quite early on Monday to keep that count alive. So expecting upside movement quite early on Monday next week. Dollar yen, still holding this wedge formation. We've been highlighting this Fibonacci confluence area. It's a 78.6% pullback of this sell-off and a 127.2% extension of this first wave. We've breached it. We've really only got inside soldiers at the moment. If we get a breakout to the upside, then really the next Fibonacci level to look at is 114.62, but we still favour the downside. 113.50 is trendline support, a break there, and the measured move is 111.40, which is obviously what we're going to be looking at for next week. And if we do look at the yen crosses, we're going to concentrate on euro yen in this video, then it does highlight downside pressure really for yen crosses after a potential correction higher. Dollar CAD, I'm showing you the weekly chart here because there's still a bullish count in the weekly chart. 133.05 is trendline resistance, and really to keep this wedge formation alive. To the downside, we've got bespoke support at 131 the figure. So initially next week we're going to be looking at buying into dips. Risk reward will be pretty poor at the moment to buy at current levels. Aussie dollar. Now, I've highlighted this level here only because there's, again, scope for a decent downside correction. I think the low is in place for now. 170.67 is an area to focus on for medium-term swing traders for another move to the upside. A potential head and shoulders, left shoulder, head, and then right shoulder. If we break down to a shorter time frame, we can see that we've got pretty disjointed 5-wave count. So wave 1, wave 2, 3 and 4, then up in 5 to the 261.8% extension level. Expect this move lower to be mixed and volatile, but there's no clear indication really at the moment that this correction lower is going to stall as yet. Euro sterling, the medium-term bias is still to the downside. We broke out of this channel formation. We then had a retest of the channel around about 89.12, and then we've moved lower. We've still got a gap open from the beginning of last week, and I think that's going to be closed. If we look to the shorter time frame, we've broken out of this channel formation to the upside. There's really no clear indication that this corrective rally is going to come to an end. We've got this gap open, like I said, around about 87.80, and then we've got our bespoke resistance at 88 the figure, and we've got a previous swing high at 88 the figure. So I'm expecting at least a move up towards these levels before we see some bearish pressure re-emerge for euro sterling next week. Euro yen, again, 5-wave count to the upside, stalled, reversed close to a previous swing high. I now believe that we're in a choppy ABCD formation to the downside. If we look inside legs here, we can see 5 waves. So 1, 2, 3, 4, 5. I think we're going to get a choppy move up and then a choppy move down. Really sort of selling into rallies around about 129.50, which is our bespoke resistance, is going to be the call this week. With a move down towards here, which is trendline support, coming in at 128.20. And I think we'll complete this AB CD leg and also complete a right shoulder of a bullish reverse head and shoulders pattern. So left shoulder, head, right shoulder, and then be in line with the next move up in euro dollar. Okay, I hope you enjoyed that the video report, and we'll be back again next week. Thank you very much.